Hi there, I'm John Thompson, and today on our conversation podcast, we're going to be talking about a couple different things. This is an occasional podcast where we discuss finance and we try to view it from a couple of different perspectives. I'm sort of the primary host. My son David is also the host, and we're just going to kind of have a conversation about different financial topics and how you might view those topics from a different lens, right? The lens of someone who's been working for several decades and is closer to retirement than not, than the perspective from someone younger whose career is just getting going and launching and so forth. So say hi, David.
How's it going? I would be the perspective of somebody who is just getting started in their career and is maybe a ways off from retirement.
Right. Well, that's okay. And, today we both mentioned the word retirement. So we're just going to spend the next several minutes kind of just talking about retirement from our different perspectives and what they kind of all mean. So Dave, starting off now, at the time of this recording, you're 24, been working about 3.5 years. When did you first even heard the term retirement, and did it mean anything to you?
Yeah, I'm trying to nail down that exact time frame. My guess is it'd probably be during the last recession of 2008, 2009, when I must have been 10, 11 years old. And maybe that was from you or from teachers or friends or whatnot, but a lot of people grumbling or mumbling that retirement may not be as close as they thought because of what was happening back then. So that's probably when I first learned about retirement. And what did it mean to me? Well, I thought retirement was just a time where you no longer had to work, didn't really know the intricacies of what goes into it, the planning and so forth. But yeah, that'd probably be my first exposure, I'd think.
Yeah, that's interesting. So you said a couple of things that we can maybe dig into a little bit more. You said don't have to work, right? So that's an interesting way of thinking about it. So what would that mean if you don't have to work?
You don't have to work. Well, you can focus on, well, one, you can work, but you don't need the money per se. So you don't have to work. So you can spend time doing other things, other hobbies. Maybe it's working part-time, or maybe it's just doing something that keeps the brain active. As people do go into retirement, there's always that fear, at least from what I've read or heard, that your brain turns to mush and then your life maybe has no more purpose. But others can enjoy retirement and do things with family and friends and maybe start something, a passion of theirs, making a clothing brand or whatever hobby that they might have, knitting or whatever it might be, right?
Well, and I guess one of the challenging questions that I, in my life, have been challenged with as I've gotten closer to this retirement age, we'll call it, is kind of what does it mean? Because the reality is all those things you just mentioned, you could do without being retired, right? In the conventional sense of the word. I think retirement may be different for going forward, because the reality is with technology and with remote work and activities and the growth of AI and longevity and health, we may be able to do a lot of those things while we're theoretically working.
Yeah.
Are you seeing that as a young person already or not?
Sure, absolutely. I guess if you get into the deeper conversation about that, is about AI and stuff like that, it's, well, do we even need to work in the future, or is we going to have robots or AI do everything for us? Are we going to be required to work, is the deeper, farther out question that I kind of find interesting.
Yeah, no, that's a great point. And we'll probably save that for another conversation. Yeah. I want to go back, though, to, kind of where we opened. And so back in 2008, when the financial crisis that we now refer to as a financial crisis was going on, there appeared to be a lot of fear in the air around people, whether it was within your own family, with us, other friends, neighbors, whoever, other people influencing you. What about that recession? What were the financial things going on at that time? What were the things that made people fearful? I mean, just from a fundamental standpoint.
I think there was a lot of people maybe walking away from their homes or losing their homes, which is fearful. If you don't have a place to live, that's pretty scary. I guess the home kind of feels like something that's a safe space for you, and you kind of need that to enjoy your life, or at least live your life. So that's pretty scary. I probably didn't know this back then, but people's retirement accounts were not the most healthy. But looking back on it now, I guarantee you that's pretty scary, seeing your retirement or money you saved up kind of disappear or decrease in value quite a bit.
Yeah, I think there's some good stuff from that, because as someone who did experience a significant loss in both the value of our real estate that we owned at the time and also all our other financial assets. Real estate dropped 40% in many cases. Even here in Southern California, investment accounts and retirement accounts had a very similar kind of number. And so if you were close to retirement, that's really risky, right? So if you're within a few years of retirement and that level of assets goes away, that's the big lesson for people that are sort of in their 50s and 60s and maybe even 40s. I can share is that the closer you are to retirement, you slowly reduce the risk that you have in those other assets, because it's really challenging to go into a retirement, again, if you're counting on those assets to give you income, and then suddenly they're evaporating, that could be a problem, and so forth. So now that you are working, I mean, there's some simple lessons you want to share that for someone that's not at my age group?
Sure. Yeah. I mean, now that I am working, I see how much time and planning has to go into maybe a retirement date eventually. And it takes a lot more money than I thought. I'll go with that. But no, for today, at least, I'm younger. I'm sticking to my kind of investment philosophy of investing on a consistent basis monthly. And so even though we're in a down market now, for me as a younger folk whose retirement is further off, it's an opportunity to get stocks and whatnot cheaper and to keep investing. Further down the road, 40 years, 30 years, I won't notice this little blip of the stocks being down, right? So for me, it's far off. I'm not actively looking and whatnot at investments or stock prices. It's just stay the path and it'll all turn out good in the future.
Good. What's it mean that stocks are cheaper right now?
Well, it means I can get more of them now than I could have if they were more expensive. So yeah, if they're cheaper today, hopefully they'll be worth more in the future when I actually am looking to retire.
So if I can paraphrase what you're saying, just so we can share with the audience, sort of the educational nugget in there is that even right now, as this is being recorded, we're probably in a recession, and the market's taken in late, through the last half of 2022, the market took about a 25% cut in value, right? So if something that was worth $100 a year ago, now you can buy it $80. You feel bad if you bought it at $100, now it's worth $80, right? That doesn't feel good necessarily, but we have very little control of any of those kind of things. But the idea of now buying it at $80, and now you have two things, one worth 80 and one worth 100. What's the combined value of those, right? It's $90. So now your cost of the two things you purchase is now actually lower. So you have an opportunity as the market comes back, when the value maybe goes back to 100 or 200 or whatever it goes to down the road. Now you have your average cost of all those assets or stocks is ideally lower. So it's a concept called dollar cost averaging, that even in down markets, you buy things you already have, right? You typically don't want to sell something in a down market if your viewpoint is long enough kind of out there. So that's cool. So have you heard of semi-retirement or partial retirement?
I don't know if it's a thing of younger people. I've heard of it. It is a concept, and probably didn't think about it before I actually started working. But yeah, no, it's a concept in semi-retirement or part-time retirement, something where you can stay busy, stay active, stay kind of working and work on your own kind of terms or time to stay active and stay, I guess, not bored. Sounds pretty nice.
Yeah, I've seen lots of articles about, and maybe it's a symptom of the crypto market or sort of the new growth of the tech market, different things with people working really hard to try and retire. And I've seen it from both perspectives: make a lot of money, make it really fast, and then get done, or make money and then live really small, right? Live really small and cut your expenses to the bone so that you can have a very small lifestyle, which doesn't then cost you a lot of money, right? You don't need to make a lot of money. Maybe you can only work part-time, or maybe you can live in another part of the world, which is a lot less expensive than Southern California, those sorts of things. So I do think they're interesting. I think to each his own at the end of the day. So we'll see where all that goes. Well, what final words do you have on this subject, David?
What final words? I guess my final words would be about retirement. Find out what that means to you and when your ideal retirement or semi-retirement age might be. And you got to work backwards. The power of starting early and investing early can't be said enough. I think you taught a class maybe at my high school, and it gave a quick example about, somebody who invested a couple $100 when they were starting at 16 years old versus somebody who started at 30 years old. The difference in the amount of money they had when they were entering retirement, let's say 65, was insanely substantial. So I can't stress that enough, that I guess I adopted that starting early, and I think many can and should and will do.
Yeah, no, that's great. What Dave is referring to is a rule of 72, where your money doubles based on that rate of return and so forth. And if you can start early enough and get the last double, do really well before you sort of move into that next phase of your life. What I'm going to leave with is advice to people that are, sort of closer to my age, 50s and early 60s and even late 40s. If you feel like you haven't done an adequate job in saving, but there's still time. You have to start where you're at. You can't worry about the past, and the past is the past. Let's stay focused on the present and the future. I think it's very powerful, the idea of trying to grow your income, at the same time reduce your expenses, right? So if you can have income kind of going up even steadily, but then expenses coming down the other way, you're going to reach that freedom point at some point. And the freedom point, as I define it, is the idea that you have enough assets that are throwing off passive income you're not working for, that covers your expenses. So quick example, let's say it costs you $4,000 a month to live with all your expenses. You need to have enough assets that will generate $4,000 a month. That actually includes Social Security and other benefits that might be available to you or whatever else it might be. And if there's a gap there, let's say you only have enough assets to produce $2,500 a month and you need 4,000, then that's your gap, right? And that means $1,500, and maybe you're working part-time to make that up or so forth. But I still would say it doesn't matter where you are. You make a plan, keep going forward, and stay positive. And I think that all things are wonderful. There's an amazing future in front of us, amazing opportunities, and it can all be done. So great. So that's our conversation for today. We'll continue to put these out occasionally. Again, kind of a next gen, old gen perspective on different financial topics. And we appreciate you taking the time to tune in. Drop us a note anytime, and we'll be happy to answer your questions and so forth. All right. Thanks.